Hello traders, welcome to the Nexoel Trading Hub YouTube channel. So we're going to be looking at the weekly forecast for the coming week. This is the dollar index and we're starting off from the weekly time frame. You guys know last week I made an emphasis to the fact that we're in the month of August and we may not be seeing pleasant price movements. And I still gave us perspective that we could leverage for our trade executions. So what we can see now from the weekly time frame in the dollar index is the fact that price reacted from this weekly bullish fair value gap zone and we had the bullish movement to the upside. Price returned to the downside into the weekly bullish fair value gap here after price traded into this weekly bearish order block. Price returned before the bullish continuation that took out the relatively equal highs we had here, the buy side liquidity, which we anticipated to see that price was gonna trade through those and then grab all the buy side liquidity resting here. So what we can now see is the fact that volume closed below after taking out the buy side liquidity, the relatively equal high points, and then we can now see further fall of price to the downside. So what we can see, last week took out buy side liquidity, a volume closed below the low of this previous weekly candle. What we can see from the broader perspective, we know that the dollar index is in a bearish movement to the downside, but now price have reacted at the bullish weekly fair value gap zone and then give this bullish movement to the upside. So this is the drawn liquidity base off from the monthly time frame, a monthly bearish fair value gap zone. So what we can now see is that the narrative is telling us to see the possibility of bearishness to the downside. But here we have bullish reaction from this bullish zone. So we really just have to be open-minded with the dollar index and see what happens if price violates this level strongly to the downside. Then we know that we are going to have the possibility of a bearish continuation to the downside. So for the coming week, let's look at the daily time frame to frame out the narrative for the coming week. So what we can see from the daily time frame is the fact that after the reaction at the weekly bullish fair value gap zone, we had this bullish movement and then price returned to the downside, mitigated the zone. So you can see this is the zone we marked from the weekly time frame, mitigated that, and then bullish movement that broke this high, took out this high points. So what we can see, for us to really be bearish, to anticipate bearishness, we have to see price then violate this daily bullish order block. So it means if you are bearish, you want to take bearish movement. So you want to trade bearish first to this bullish order block. So if price violates this bullish order block, then that is when we can now have the consideration that we want to see for the bearishness to the downside in the dollar index. Because what we could see is that price may trade lower to the bullish order block, and then we have bullishness to the upside in the dollar index. So this is what we may see in the dollar index. So it's either we see price trade lower into the bullish order block here in the daily time frame and we have bullish movement of price to the upside, or price may now trade to the downside and violate the bullish order block, and then we could start seeing what bearishness to the downside, more bearishness to the downside. So if you're bearish, you have to trade bearish first to the bullish order block and see the reaction, because price may give us bullishness, or you wait then for price to violate the bullish order block in the daily time frame, and then you look out for a return and then the bearish framework to continue bearish to the downside. And what we can now see from the narrative we're seeing here is the fact that now we had this fall of price bearish to the downside and we have this engulfing candle. So we may see if price is going to continue just bullish when the market opens. So it means that we don't want to see price violate this low points. So we want to see this low point holds, this level holds for us to have what's a bullish continuation then to the upside. So if price then trades lower, then in order to seek this liquidity, so we have this bullish order block as a reference point. The violation of this bullish order block is what would then give us a clear bearish narrative. Let's check the 4-hour time frame. So here in the 4-hour time frame, what we can clearly see is the level mark from the daily, which is the daily bullish order block. And we can see here our price traded to the downside here, and we have this push of price to the upside. So it means if you are looking at bearish movement, so you'll be targeting to see how price will seek out this relatively equal low points into this zone. From a lower time frame, you want to frame that into this zone. First, the daily bullish order block. This would be your target, because from here we may see price now gives us a reason to go bullish to the upside. So if you want to anticipate to have strong bearishness, then you may wait to see how price violates that, and then we have the bearish fall to the downside. So this is just what I have to show us in the dollar index. So this is a month of August, so we just really need to be very careful with our trade entries. Yen, Euro, USD, what we can see is how price traded bearish to the downside. Past few weeks, we anticipated that bearishness when we saw price mitigated the weekly bearish fair value gap. We called out the possibility for us to hold bearishness, long-term bearishness to the downside. And what we can see is how price traded bearish into this level and price gave a rejection to the upside. So what we can see clearly now is how price is giving us a possibility of higher prices. So if price is going to continue higher, so it means we have this monthly fair value gap here, monthly bearish fair value gap as a target to look forward to see price trade into, which is the next draw on liquidity. But then if the dollar index gives us a bullish narrative, then it means we want to see bearishness in the Euro USD. So it means that the Euro USD should not violate this key level here in the markets. So we could see price respect that and then give the bearishness. But then if the dollar index continues in a bearish narrative, gives us a strong bearish narrative, then we should anticipate to see our Euro USD continues to the upside. So let's check the daily time frame. So here in the daily time frame, what we can see is when price mitigated the weekly bearish fair value gap the second time, we had a very strong impulse to the downside. You can clearly see that strong impulse bearish to the downside to the level identified from the weekly time frame, key level, which is also an open close price key level, which also now in the daily time frame we can see here we have this key level as a level that offered support to push price higher. So we have the strong bearishness, and that began after this last up close candle and then mitigation of the weekly bearish fair value gap the second time, and then we have the bearish impulse to the downside. So for us to really have a strong reason to want to sustain bullishness, then price should violate this level that we have here, meaning we want to see then how price is going to give us strong reason, strong bullish reason to the upside, and then we can anticipate see price trade into the monthly bearish fair value gap as a draw on liquidity to the upside. But so we have to wait now to see, due to what we are seeing from the dollar index. From the dollar index, then we have a demand zone we're anticipating to see how price will react from it. If price violates it, then that is when we're strongly now bearish, which will now help us to understand how the Euro USD and the GBPUSD and all other pairs that are paired with the United States dollar, how they are going to react and deliver in the markets. So here in Euro USD, you can see there is a supply zone here, for us to wait to see how price respects this. If price violates this, then that is when we have a strong bullish reason. So if you are bullish, then you want to trade first bullish into this level here. You want to trade bullish to the supply level here. Wait to see how price reacts here. If price violates that strongly, then you know that we would have sustainable bullishness to the upside into the monthly bearish fair value gap zone, because we could see price come into this level, and in lower time frame we can have sell model formed, and then we may see price now trade lower to the downside in the Euro USD. So what is going to determine our sustainable bullish movement is we have to wait to see how price reacts here, because price may give us bearish reason from this zone, looking at what we are seeing also from the dollar index. So this is what I have to show us from the daily time frame in the Euro USD. Last week I told us to anticipate to see how price was going to return into this fair value gap, and then if this gives us a buy reason, then we buy, and we want to buy first at this level, because from here we may see sell reason. So let's check the 4-hour time frame. So here in the 4-hour time frame, clearly we can see that in the 4-hour time frame we have a bearish order block there. So if we want to continue bullish, we may see price return to the downside, give a pullback a little. Basically, just when the market open, we may see price falls a little to the downside into this unmitigated week, and then seek this buy side liquidity. So we want to trade bullish first to this level, because we may see this give us what a sell reason for us to fall to the downside. So it means that if we are strongly bullish, then when we are trading bullish, meaning if there is a bullish reason from the lower time frame for us to anticipate bullish continuation, then we want to trade bullish first to this bearish order block. If price violates that, then that is when we have a reason to hold sustainable continuous bullishness to the upside into the monthly drawn liquidity, which is the bearish fair value gap zone. Not to waste much of our time, let's head to the GBP USD pair, guys. Here in GBP, we saw how price traded into this monthly supply zone, and we anticipated the bearish fall to the downside. Price fell, creating equal lows here, sell side liquidity resting here, and we saw now price giving us bullish reason to the upside. So what we can see is price took out this buy side liquidity, volume closed below that, but anyway, we have bullish volume to the upside. So clearly it means if this is gonna go bullish, we are bullish to a key level here. So what we can see here is contradicting basically the anticipation for the dollar index, which may possibly give us what bullish movement if price trade into the daily order block. So that is why I said we just have to be open-minded, especially this month of August, where most of the institutions are actually on summer holidays. So let's check the daily time frame. So what we can see in the daily time frame is this is a key level from the weekly time frame we marked out. Here in the daily time frame, what we can see is price reacting at this candle wick, price mitigating that again the second time, taking out this buy side liquidity, and what we can see is the volume of this candle failed to close above this bullish candle, giving us what bearishness to the downside after taking the buy side liquidity. So it means we may see this dip more lower to the downside before the possibility of bullishness to the upside. If I am bullish in the GBP USD, this may really give us reaction that would respect it to the downside, because we can see this bearish candle took out the buy side of this previous daily, and we can see volume close below that. So what I'm saying is we may see price falls to the downside before the possibility of bullishness into this key level. But then if price continues bullish to the upside, then we want to be bullish to this key level, because this may give us a reason to have bearish narrative to the downside in GBP USD. So this is what I have from the daily narrative. Let's check that from the 4-hour time frame. I'm really just giving us a quick one, and what we can see in the 4-hour time frame is how price took out this buy side liquidity. Volume is failing to trade above that, respecting this fair value gap, because price traded into this fair value gap here, and we can see how price gave us rejection to the downside, impulsive bearish movement, respecting this level that price have created, because we can see also that this volume is failing to trade above this. Now price have returned into this candle wick. Let's mark out that candle wick, this unmitigated candle wick, and price have mitigated that, giving us rejection again. So if this is gonna hold price, which may hold price, so we want to see how price then may continue bearish to the downside. We have a fair value gap resting here. So the violation of that fair value gap will mean we may see bearish continuation to the downside. So if price doesn't violate that fair value gap, price trades to the downside into the fair value gap and respect that, then we may see now price trade to the upside. Let's look at that fair value gap so that you can clearly see that this is the fair value gap resting here. So if price trades to the downside, volume violates this, then we may see that act as an inversion to further send price to the downside. But then if price trade lower into that, and in lower time frame we see price respecting that, then we want to be bullish, targeting this buy side and also this buy side. So this is what I have to show us in GBP USD from the 4-hour time frame. So let's check out the gold pair, guys. This is gold, and this is the weekly time frame. Last week gold gave me some good clean clear trade setups in lower time frames, and thanks to someone in the private Telegram community, she shared her perspective. Then I went to the chart and then looked at those narratives she was looking forward to, and then I also framed something for myself from that. And that was how I got some of those good trade setups from gold. And what we can see here from the weekly time frame is the fact that we have the anticipation that price may seek this buy side liquidity, since we saw this candle took out sell side, this sell side respecting this key level here. But then what we can see is that gold just reversed to the downside. So this was where we began to utilize lower time frames for where to anticipate to see the bullish movement was going to come to an end, and the possibility that now we can have bearish movement to the downside. So when we went to the daily time frame last week, when I was explaining to you guys, I told you guys that if price is going to continue bullish to the upside, then this should hold. But then if price is not going to continue bullish, then we should see strong volume to the downside that would violate this candle low points. And clearly that was what happened. So even while we took the bullish movement to the upside, and also she was anticipating another bullish movement to the upside, I pointed the fact to her that price is reacting now at this block here, because this now served as a breaker, because we had the push to the downside. Price went to the upside, took this out, but then price traded to the downside, violating this order block, because now price is respecting this supply zone, this bearish order block. So we may begin to see what bearish movements to the downside. So we can see clearly now that bearish movement now took place, and we had bearish movement of price to the downside here. So what we can now see is the fact that price is respecting this violated bullish order block in confluence the bearish fair value gap here. So it means for us to have our bearish continuation, or we see gold gives us bullish movements, what we have to identify is the fact that we have this buy movement before the sell movement here that took out this liquidity. So we could just identify this candle here. So what we can see is that price have not even traded into that. So we may see more lower prices. And if price violates this, then we may begin to see continuous bearishness. So it means in the gold pair, we are looking forward to see how price is going to still trade lower. And if price violates this, then we may see that continue lower to the downside in gold. So first we'll be looking at price returning to this level here, this candle wick level here. This will be the first target if price is going to continue bearish, violating this block here that gave us this bearish movement that's called this liquidity. So if price violates that, then we may see lower prices to the downside to this candle wick. Let's identify that fair value gap so we can see price respected that and then drop to the downside. So it means that if we're looking forward to our bearish continuation, we may identify this level here. If price decides to trade higher, so we may see price trade here, respect this, and then price would fall to the downside. This is what I'll be looking forward to see. So first is to see how price trade into this. So if price then trade into that and decides to respect that, to want to give bullishness, then we trade bullish. But from what we are seeing, we're anticipating the possibility that price may fall more lower. So first bearish target is into this block here, and if price violates that, then we may see price trade lower into this candle wick. So if price comes here and gives buy reason, then you should then buy. But we're looking forward to more lower prices to the downside. Let's check the 4-hour time frame to look at what possibly we could see in the 4-hour time frame. So here in the 4-hour time frame, we can clearly see the fact that price came from a fair value gap here, respected that fair value gap. Now we had the fall to the downside. You know, I told us if we are bearish, if we're going to see bearishness, price will break out through this consolidation. Last week I pointed that out. So we can see how price broke back to the downside and then took out this low points and then return retesting, and then we have bearish to the downside. So we can just see here that we have, this is the buy candle, this took out this high buy side liquidity before falling to the downside. So if we don't continue bearish here, what I mean is if price doesn't continue falling here to the downside here and giving us a possibility that price would violate this zone we identify from the daily time frame, then we would see how price would continue more lower to the downside. Or if price gives us reason to want to trade upwards, So price will trade to the upside, take out this buy side into this zone, and here we may see price gives us bearish reason to the downside. So for you to be strongly bullish, then it means that price would have to violate these high points. It means that what you'll be looking for to see is price may trade and violate this, then that is when we can consider bullish reason to the upside. I know you really want me to give you just a particular perspective, but this is the month of August, so I'm giving us possibilities that may happen in the markets. So this is what I have to show us, guys, in the gold pair. So let's check out the BTC USD. Here in BTC USD, what we can see is the sweep of this buy side liquidity, and the week is already ending. So we can see that volume is trading below this high and also below the highs, the volume of this weekly candle. So definitely we're going to see that volume is going to close below these candles and these high points. So buy side liquidity have been taken, so we may see price now continue bearish to seek the sell side liquidity here, the low of this candle. In extension, then we want to see how price may possibly trade lower to this low, the volume here, the close price of this bearish and the open price of this bullish. And if this then is going to continue strongly bearish, then it may seek in extension this sell side liquidity resting here. What we can see is the fact that price took out this high point here. We have a sweep before price pulled back and then continued bullish. Here price created this bullish order block, price return mitigated that bullish impulse to the upside. So what we have is this unmitigated candle wick, which we have open close price, a key level. So if we're going to see sustainable bearishness to the downside, then it means this is the level we want to see price drop to the downside into. That is if it's going to be sustainable bearishness. But then you have to look at first, what will price seek? The sell side. In extension, trade into this volume and the possibility of this sell side. So what we can now see, let's look at the daily time frame. Here in the daily time frame, we can see also the sweep of this high point and now bearishness to the downside. Here we had a sell movement before this bullish movement that took out this high, and we can see we have an engulfing candle here, a change in state of delivery here. So what we can see from the daily time frame is a possibility that price may trade higher to seek this buy side liquidity, mitigate this volume of this bullish candle, and then we have the possibility of bearishness to the downside. So first we want to trade bearish to this level because here we have a sell movement before a buy movement, and price have not really mitigated that. So want to see bearishness first to this level, and we can now consider the possibility that if price violates that, then we may see continuous bearishness to the downside to seek this low points. So this is a narrative from the daily time frame. Let's check the 4-hour time frame. Again, the 4-hour time frame, what we can see is price traded to the upside, taking out this high, which we saw from the daily. We saw the sweep of this, from the weekly, the sweep of this high. So we can see after price swept that high, bearish impulse to the downside, where we had that change in state of delivery. We can also see that here in the daily time frame, price took out this low, giving us the market structure shift. So we have buy side liquidity resting here. So if we are going to see the bearish movements and price deciding to trade higher, so I don't want to see price violate this zone I marked out here to give us a sell model to trade bearish to the downside. So this is what I have to show us in BTC USD. So clearly this is my anticipation. The possibility we may see price return to the upside to seek this buy side and then give the sell model to trade lower to the downside. So till I see you guys next week, cheers and God bless you all.